Hello and welcome back to our channel. Today, we're going to talk about everything you need to know to build wealth on the Bitcoin revolution. Bitcoin has been making headlines for quite some time now, with its value skyrocketing over the years. In this video, we'll go over everything you need to know to get started with Bitcoin and how to build your wealth through it. So, let's get started. First things first, you need to understand what Bitcoin is. Bitcoin is a decentralized digital currency that allows for peer-to-peer transactions without the need for a central bank or government. Bitcoin uses blockchain technology to securely record transactions and ensure that the currency cannot be duplicated or counterfeited. Now that you know what Bitcoin is, the next step is to understand how to buy it. You can buy Bitcoin through various platforms like Coinbase, Binance, and Kraken. These platforms allow you to buy Bitcoin with a credit card, bank transfer, or even PayPal. Once you have your Bitcoin, the next step is to store it safely. You can store your Bitcoin in a digital wallet, which is essentially a digital version of a physical wallet. These wallets can be accessed through a computer or mobile device, and they keep your Bitcoin safe from hackers and theft. The next step is to start building your wealth through Bitcoin. One of the best ways to do this is by investing in Bitcoin. Bitcoin is a volatile currency, which means its value can fluctuate wildly. However, many people believe that Bitcoin will continue to rise in value over time, making it a great investment opportunity. Another way to build your wealth through Bitcoin is by accepting it as payment for goods or services. If you have a business, you can start accepting Bitcoin payments, which can be a great way to increase your revenue and diversify your payment options. Investing in Bitcoin has become an increasingly popular way to build wealth. However, it's important to understand the risks and benefits associated with this digital currency before making any investment decisions. In this video, we'll walk you through how to invest in Bitcoin in order to build wealth. Bitcoin is a decentralized digital currency that uses blockchain technology to securely record transactions and ensure that the currency cannot be duplicated or counterfeited. Bitcoin has a limited supply of 21 million coins, which makes it a scarce asset and potentially valuable investment. The next step is to choose a reliable and reputable platform to buy Bitcoin. Once you've chosen a platform, the next step is to create an account and verify your identity. This is usually a simple process that involves providing your personal information and submitting a photo of your ID. Once your account is set up, you can start buying Bitcoin. You can either buy a fraction of a Bitcoin or an entire Bitcoin, depending on your investment goals and budget. Bitcoin's price is notoriously volatile, so it's important to consider this when making your investment decisions. It's also important to note that Bitcoin is not backed by any government or central authority, which means its value is subject to market fluctuations and could potentially lose value. After buying your Bitcoin, it's important to store it safely. You can store your Bitcoin in a digital wallet, which is essentially a digital version of a physical wallet. These wallets can be accessed through a computer or mobile device, and they keep your Bitcoin safe from hackers and theft. It's important to choose a reputable and secure wallet, and make sure to keep your login information and recovery phrase in a safe place. As with any investment, it's important to do your research and only invest what you can afford to lose. Bitcoin is a high-risk investment, but it also has the potential for high rewards. By understanding how to invest in Bitcoin and taking the necessary precautions, you can potentially build wealth through this digital currency. Investing in Bitcoin can be a lucrative way to build wealth, but it's important to understand the risks and benefits before making any investment decisions. By choosing a reliable platform, buying Bitcoin, storing it safely, and doing your research, you can potentially reap significant financial rewards. You can also earn Bitcoin by mining it. Bitcoin mining is another way to earn Bitcoin and potentially build wealth. However, it's important to understand that Bitcoin mining is a complex process that requires specialized hardware and software. In this video, we'll explain how Bitcoin mining works and how you can get started. Bitcoin mining involves solving complex mathematical equations to validate transactions on the Bitcoin network and create new Bitcoin. This process is carried out by a network of computers, known as miners, that compete to solve these equations and earn Bitcoin rewards. To start mining Bitcoin, you'll need specialized hardware, such as an ASIC, application-specific integrated circuit miner, which is designed specifically for Bitcoin mining. These miners are expensive and consume a lot of electricity, so it's important to factor in these costs when considering Bitcoin mining. You also need specialized software, such as mining software that connects your miner to the Bitcoin network and allows you to track your mining progress. There are various mining software options available, so it's important to do your research and choose a reputable and reliable software. Once you have your hardware and software set up, you can join a mining pool, which is a group of miners who work together to solve the mathematical equations and earn Bitcoin rewards. Joining a mining pool can increase your chances of earning Bitcoin, as it allows you to pool your resources and compete with other miners. Bitcoin mining is a complex process, and it's important to note that the mining difficulty increases over time as more miners join the network. This means that it becomes increasingly difficult to earn Bitcoin through mining, and it's not a guaranteed way to build wealth. Bitcoin mining can be a lucrative way to earn Bitcoin and potentially build wealth, but it requires specialized hardware and software, as well as technical expertise and resources. It's important to do your research, factor in the costs, and join a reputable mining pool before starting Bitcoin mining. In addition to Bitcoin mining, there are several other ways to earn Bitcoin that offer unique advantages compared to the traditional banking sector. 1. Bitcoin trading. Bitcoin trading involves buying and selling Bitcoin on a cryptocurrency exchange. This is similar to trading stocks on a stock exchange, but with Bitcoin as the asset. Bitcoin traders buy Bitcoin when the price is low and sell it when the price is high, earning a profit in the process. Some popular cryptocurrency exchanges for trading Bitcoin include Binance, Coinbase, and Kraken. 2. Bitcoin lending. Bitcoin lending is a way to earn Bitcoin by lending it to others and earning interest on the loan. This is similar to traditional banking where the bank lends money and earns interest on the loan. In the world of Bitcoin, platforms like BlockFi and Celsius Network offer lending services where you can lend your Bitcoin to others and earn interest on the loan. 3. Bitcoin faucets. Bitcoin faucets are websites or apps that give away small amounts of Bitcoin for completing simple tasks, such as watching ads or completing surveys. While the amounts earned through Bitcoin faucets are small, they can add up over time, and they offer a fun way to earn Bitcoin without investing any money. 4. Bitcoin affiliate programs. Bitcoin affiliate programs allow you to earn Bitcoin by referring others to a particular service or product. This is similar to affiliate marketing in the traditional banking sector, but with Bitcoin as the currency. For example, the cryptocurrency exchange Coinbase offers an affiliate program where you can earn Bitcoin by referring others to the platform. 5. Bitcoin staking. Bitcoin staking involves holding a certain amount of Bitcoin in a digital wallet for a set period of time to earn rewards. This is similar to earning interest on a savings account in the traditional banking sector. Staking Bitcoin requires specialized wallets and platforms, such as Trust Wallet or Ledger Live. There are several ways to earn Bitcoin that offer unique advantages compared to the traditional banking sector. Bitcoin trading, lending, faucets, affiliate programs, and staking all offer different opportunities to earn Bitcoin, depending on your preferences and investment goals. It's important to research each method and understand the risks and benefits before making any investment decisions. Yes, dollar cost averaging can be applied to Bitcoin investing. Dollar cost averaging is an investment strategy where an investor invests a fixed amount of money at regular intervals, regardless of the price of the asset. This strategy helps to smooth out the impact of price volatility over time, as the investor buys more shares when the price is low and fewer shares when the price is high. In the context of Bitcoin, dollar cost averaging can be applied by purchasing a fixed amount of Bitcoin at regular intervals, such as weekly or monthly, regardless of the price. This approach can help to mitigate the impact of price volatility on your overall investment, as you are buying Bitcoin at different prices over time. For example, let's say you decide to invest $100 in Bitcoin every week for a year, regardless of the price. In week 1, the price of Bitcoin is $10,000, so you would buy 0.01 Bitcoin. In week 2, the price of Bitcoin drops to $9,000, so you would buy 0.0111 Bitcoin. In week 3, the price of Bitcoin rises to $11,000, so you would buy 0.0091 Bitcoin. Over the course of the year, you would have purchased Bitcoin at various prices, resulting in an average cost per Bitcoin that is lower than the highest price. Dollar cost averaging can be a smart way to invest in Bitcoin, as it reduces the impact of market volatility and helps to smooth out the price over time. However, it's important to note that Bitcoin is a highly volatile asset, and investing in it carries risks. It's important to do your research, understand the risks, and invest only what you can afford to lose. A similar concept to index funds can be applied to Bitcoin investing through the use of Bitcoin exchange-traded funds, ETFs, or Bitcoin index funds. Bitcoin ETFs are investment funds that track the price of Bitcoin and trade on traditional stock exchanges. They allow investors to gain exposure to Bitcoin without actually owning the underlying asset. Instead, investors purchase shares of the ETF, which represents a proportional interest in the Bitcoin held by the fund. Bitcoin index funds, on the other hand, are actively managed funds that aim to track the performance of the entire Bitcoin market or a specific segment of it. These funds typically invest in a basket of cryptocurrencies that represent the overall market or a specific sector of the market, such as large-cap or small-cap cryptocurrencies. The benefit of investing in a Bitcoin ETF or index fund is that it allows for diversified exposure to the Bitcoin market without having to manage a portfolio of individual cryptocurrencies. This approach can also help to mitigate the risks associated with investing in a single cryptocurrency, as the fund holds a diversified portfolio of cryptocurrencies. However, it's important to note that investing in Bitcoin ETFs or index funds carries risks, such as market volatility, liquidity risk, and regulatory risk. Additionally, fees associated with ETFs and index funds can eat into returns over time. As with any investment, it's important to do your research and understand the risks before investing in a Bitcoin ETF or index fund. A similar concept to mutual funds can be applied to Bitcoin investing through the use of Bitcoin mutual funds or hedge funds. Bitcoin mutual funds are professionally managed investment funds that pool money from multiple investors to invest in a portfolio of cryptocurrencies. These funds are similar to traditional mutual funds in that they offer investors diversified exposure to the cryptocurrency market through a professionally managed portfolio. However, unlike ETFs, mutual funds are not traded on stock exchanges, but rather are bought and sold through the mutual fund company. Bitcoin hedge funds, on the other hand, are investment funds that use various investment strategies, such as long-short strategies or quantitative strategies, to invest in cryptocurrencies. These funds are typically open only to accredited investors and have higher minimum investment requirements than mutual funds. The benefit of investing in a Bitcoin mutual fund or hedge fund is that it allows for diversified exposure to the cryptocurrency market through a professionally managed portfolio. This approach can help to mitigate the risks associated with investing in a single cryptocurrency or managing a portfolio of individual cryptocurrencies. However, it's important to note that investing in Bitcoin mutual funds or hedge funds carries risks, such as market volatility, liquidity risk, and regulatory risk. Additionally, fees associated with mutual funds and hedge funds can eat into returns over time. As with any investment, it's important to do your research and understand the risks before investing in a Bitcoin mutual fund or hedge fund. In conclusion, Bitcoin has the potential to revolutionize the way we think about currency and finance. By understanding how to buy, store, and build wealth through Bitcoin, you can take advantage of this digital currency and potentially reap significant financial rewards. So, what are you waiting for? Start your Bitcoin journey today and see where it takes you. Thanks for watching, and we'll see you in the next video. If you benefited anything from this video, please don't forget to like, subscribe and hit the notification bell to stay updated on our latest videos.